Clients will often come to us asking the question, do we think that the stock market is going to keep going down? And the honest response is that we have no idea. From one day, week, month, or even year to the next, the stock market can do all sorts of things that you were not anticipating. So we don't try to make those predictions. Instead, we look at the stock market in a much different, much longer term framework. This JP Morgan chart kind of puts that in the correct context. So the question we're asking ourselves is not, do we think the stock market is going to go up tomorrow? The question is, at some point in the future, do we think the stock market is going to return to new all-time highs? And to that question, we think the answer is absolutely yes. Historically, anytime there's been a decline, it has been temporary, and the stock market has eventually gone back up. We have no reason to believe that this time should be any different. So in that framework, we look at and say, how long does it take to get there? When we look at the S&P 500 at the high of January 2nd, 2022, it was at 47.97. It finished the year at 38.40. So the question becomes, how long does it take to get back to where it was? If the answer is 1 year, we're looking at a 26% annualized return. If it took 5 years, if it took 5 whole years in order to get back to where we were, we would still be looking at over 6% annualized returns from that period of time. So in that context, I don't necessarily care whether the stock market goes down tomorrow, the next day, or the next year. The reality is, I know that in 5 years' time, if the stock market has once again revisited new highs, I will have made an annualized return of 6.4%, or better if things happen more quickly. The chart on the right looks at historical bull markets and how long they've lasted. And over here, it's looking at bear markets and how long those lasted. Historically, bear markets have lasted about 20 months, but some have been a lot shorter, some have been longer. The longest on this chart is going back to 1937, and the bear market lasted 61 months, which is roughly 5 years. With that being said, as an investor, especially a long-term investor, thinking about how they position stocks in their portfolio, stocks should not be used for your near-term needs. If you have near-term expenses that you know you have coming up in the next 2 years, that should be in very, very short money market, T-bills, things of that nature. If you have money you think you'll need in the next 2 to 5 years, leveraging bonds can make a lot of sense for that purpose. But for your longer-term money, the money you have no need for in the next 5, 10, 20, 30 years, the stock market still remains what we believe the best investment for those assets. So again, if you have any questions about this or anything else, please don't hesitate to ask. We're always here to help.